In this video, we are going to be analysing Mullen, ticker MULN. So it is moving a bit pre-market, but what are going to be the key levels, the key trading opportunities that we can see on Mullen? So on the longer term time frame, we have levels, and kind of the key ones that I'd be paying attention to is around 59 cents and 98 cents. So these will provide really high probability trading opportunities. So first time you hit them, you look for the short. If it goes back to retest them, then you're waiting for that break above the level, come back to test it as a support, and if it holds, then we're looking to play direction. So they're going to be the really high trading opportunities, but very far from where we are now, considering we're at around 20 cents. It requires the stock to increase by 175% from where we are now. Is that likely to happen in the near future? Probably not. So how do we go about trading this then? So what we then look to do is really we just have to cut down the time frame. So 30-day and a 90-day will kind of give us levels closer to where we are now and trading opportunities for the nearer term. Again, I wouldn't do as much size on these because they're not as high probability, but they can still definitely provide opportunity. So we do have a resistance end at 23 cents. If we broke that, we have our next resistance at 31, going on to 33, going on to 40 cents. And then final levels taking us to around 55 and 48 cents. Then again, that's when we come back into that 58 cents, which is that longer term level. That's when I would really be paying attention. This level will be a key level. These, before here, you may be able to trade them just more as kind of a day trade, a bit of a scalp, but these 58s, you should be able to get a really good longer term trade on it. Now, if you end up falling in price with the key supports, and we're looking at 15 cents, 12 cents, 6 cents as key supports. Again, if they push to the downside, you can just look for kind of the bounce on the first time you touch it. And again, once you're up maybe a few cents on the trade, you look to move your stock to break even and then look to kind of carry on playing direction. Now, to the downside, I wouldn't look to play direction. The reason for that is there's a lot more risk to the reward. For example, if you kind of break this 13 cents, you come back, you retest it as a resistance, and it kind of continues to push down. Cool, you still got a 3 cent stop, but you're looking at maybe 6 cents. So again, you can get a 1 to 2 risk to reward, but your feels may not just be great. And again, you're taking a lot more risk. Unless it's a day trade, then again, it may still be justifiable. But I think it'll be a lot easier of a stock to trade if it's to the upside. But really, if you're a bit more conservative and you want the high probability trades, wait until 58 cents. That'll be a good trading opportunity. Anyway, hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.